So I'm going to ask you a question. How much of your income do you actually put in the bank each month? Well, you get your paycheck. What do you do with it? Well, you put it in the bank. How much of it? Well, you put 100% of it in there. Then once you put it in there in your checking account, what do you do with it? Well, you write checks out of it and pay bills. Okay, so that money that you took out of your account to pay the bills, what happened to the money? Where'd it go? Well, you paid the bills, but the money that was in the account is just gone. Actually, there's a better way to do that. One of the real desirable things about this cash flow system I'm about to talk about, institutions like banks or people like Warren Buffett, Bill Gates, Jeff Bezos, they've been using this system for years. What all the other banks are doing right now, they're filtering their money, all the deposits you give them, through a thing called bank-owned life insurance. In the bank you're using, you put $1,000 in, well, you can pull $1,000 out. That's it. But in our bank, what's going to happen, you put $1,000 in, and you could immediately pull out $1,200. Now, which bank would you rather put your money in? It's pretty obvious, I think. How can that happen? Well, remember I was talking about those dividends and 4% return you're making? Well, that non-direct recognition means that even though you pulled the money out and used it to pay bills, the life insurance company didn't see it happen. It didn't recognize it. So therefore, it's still paying those dividends and those internal rate of return of 4% as if the money is still sitting there while you're using the money. I probably just blew your mind. And this is one of the reasons that banks and Wall Street and other financial advisors don't want people to know about this. Because if everybody knew about this, nobody put money in banks. By the way, all of this money that generates is tax-free. A lot of retirees have their money just parked in the savings account. They've saved their money their whole life and put it there. The savings account currently are paying nothing. And actually, inflation, you're losing money because the inflation rate is going to go up from 2.5% to maybe 3% to 3.5%. And your savings account is generating 0.01%. So you're losing money by parking it in the other bank. Your money has to do something. In the recession of 2008, 41% of retirees' nest egg incomes got hit big time, and their value of their homes decreased. And as we all know, it's a question of when, not if, the next big recession is going to hit us. Are you prepared for that? For most retirees, the biggest source of your income is your Social Security. Second would be things like 401ks, IRA accounts, company-funded pensions, things along that line. The average income for an unmarried person 65 years old is $21,000. If you're married, it's about $48,000. For an unmarried 65-year-old, the average retirement savings is around $56,000. If you're married, it's around $191,000. So I guess it pays to be married. The point for all these numbers that I've been showing you is to kind of give you a snapshot of the average American retiree. You might have more money, you might have less, but I'm just going to base it on an average retiree. And going back to the assumption that, well, we give 100% of all of our income to the bank and then we write bills out of it. Well, we have to quit doing that. Our money has to make money while we're making money. So we just don't want to survive retirement. We want to thrive in our retirement. And that's the whole purpose of this concept. So let's continue.